it feels like it's coming. When that is, I mean, most of my work suggests that, this year should continue and maybe even the first 2 quarters of next year.
I've decided not to predict publicly where I think Bitcoin's going to go. But I do think the second half of this year will be a explosive up move. But if Bitcoin were to go to, say, 500,000 by the end of this year, not predicting, I'm just saying if it did, because of a short squeeze, which I think is going to happen at some point from all the people realizing that it is a finite asset and there are people that need to borrow on it because they got in trouble from 21, 22 and they're borrowing future production and blah, blah, blah. I've now gone through this. If we get a spike, well, that'll put it at $10 trillion in terms of Bitcoin. You'll have the entire ecosystem go up.
Bitcoin is pushing into new territory. After breaking above $120,000, it briefly touched $123,000 before pulling back slightly. Ethereum is holding near $3,000, and the total crypto market cap is hovering around $3.6 trillion. These moves are coming as Washington takes up new crypto legislation, including proposed laws to formalize stablecoin usage. At the same time, global liquidity conditions are loosening, institutional flows are rising, and AI-related infrastructure demand is accelerating, all contributing to the current upward pressure on digital assets. Against this backdrop, Real Vision founder Raoul and Visser Labs chief strategist Jordi Visser are making some of the most important and most bullish predictions in the space. In a recent conversation, both agreed that crypto is not only in the early stages of another bull cycle, but that this one could run far longer than most expect. Pal believes the cycle could stretch well into next year, driven by a structural rise in global liquidity, a maturing investor base, and increasing integration between crypto, AI, and traditional finance. Jordi Visser takes the outlook a step further. While he stops short of making public price predictions, he warns that a massive short squeeze is building beneath the surface, one that could drive Bitcoin as high as $500,000. His view is based on the limited supply of Bitcoin, growing institutional awareness, and unresolved leverage from previous market cycles. According to Visser, when the squeeze happens, it could reprice the entire crypto ecosystem almost overnight. In this video, we break down exactly what Pal and Visser see happening next, why they believe crypto is entering a structurally different phase, and what it all means for investors watching from the sidelines. Please watch, like, and share this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for the support, and enjoy the video.
Given that cohort of, let's say, 25-year-olds to 40-year-olds now, that older Gen Z and core millennial cohort who are in this trap, they're deep in the middle of this trap. Not only is crypto offering them an opportunity, but we're seeing the rise of the speculative economy. And we're seeing it in prediction markets. We're seeing it, the rise of Robinhood. Robinhood's growth is extraordinary, what's going on, as people are realizing that speculation is somewhat warranted because they have no other way around it. But it also leads me into, well, the good thing that speculation is doing is testing all these things in crypto, these new ideas. They get tested like memes, which is like capital formation, instant capital formation. And also humans, if we're not in a job, we'll probably still speculate because it's fun. I don't know. There's a big rise of this speculative economy. I think is a big mega trend that people don't really see. They're too cynical.
All you have to do is go to the Fred database and look at the chart of gambling as personal consumption expenditures of gambling, which is now over $200 billion a year in the US. And it's a perfectly linear incline. And then you go and look at how much money is spent on new cars in the US, and that is on a decline. And the numbers right now for new cars, personal consumption expenditures are below $250 billion. And I'm sure after the tariffs, they'll be even lower, which means gambling is just taking over as a major, major part of the economy, which I think everyone knew because they can see it on TV. They realize there's, fan duels everywhere. But I don't think people have gotten to the point of why. And I do think it is a very major thing for younger people because of the boredom. It's a form of education. They view experiences completely different than we did. And at least they have a chance of getting money, where if they spend money on an expensive dinner, it's just lost. And so I do think crypto falls into that. I do think needing real-time information, real-time pricing, doing things when you want it all fits in with a faster world and settlements of money, everything. So I do think it's a representation that the world is getting faster and that matches AI. But I also think it gets into the boredom and the anger that people are having towards not being able to enjoy their lives the way they would want.
And when you look at the crypto landscape in terms of the adoption now of what we're seeing, all of these corporate treasuries, what does it mean to you?
So I think this year and really the last, I want to say 18 months has been about accepting a gradual acceptance of Bitcoin as something which will be here 5 to 10 years from now. So I think
remember when we first met, you were still struggling to explain to traditional hedge fund people and finance people that this was meaningful, and they thought Jordi was a nutcase. And now suddenly everything's changed, right?
everything
you are
changing.
a nutcase, but that's separate.
Yeah, that's completely separate. Bitcoin's being accepted more and more every day. What is not being accepted at this point, and actually this is a good place for us to talk a little bit about it, because I've said this on my YouTube videos. This feels a lot in the altcoin world like the post.com bubble to me. It feels like there's a lot of people that got involved. So think of the internet from 95 to say 2000. A lot of people joined into it. They left banks. They got involved and they were hoping to make tons of money. It was a free thing. Everyone got involved. And then you had this big fall. And it took a while to come. It took a while for the NASDAQ to get out of the problem. And one of the reasons it took a while to get out, just like it was in Japan with all of the banks owning shares of, everything about this overhang of people that had gone into something. Every time anything goes higher, there seems to be a wall of supply that stops it from the crypto community. Now we've got circle enthusiasm. So we've got people focus a little bit. You got Coinbase back up to the highs. So I'd say the traditional finance world is getting a little bit more excited. Now you've connected, in the last week, you've connected, CoreWeave and Core Scientific. So now we're getting some of the Bitcoin miners back involved. All of a sudden, the traditional finance world is starting to see things. I have said publicly, and I will continue to see it until Ethereum breaks out. Because of the network effects on stablecoins, which I think is there. Until Ethereum breaks out, just another OG of one of this, and people start getting on board, I don't think we're going to have the kickoff to what I believe will be the end of the dot-com bubble overhang. And I think that's what we have in crypto from the 21-22 period. A lot of overhang. It seems like there's a lot of supply. And once we work through it, I still believe there's going to be a short squeeze in the entire space this year.
Yeah, I think you're right. And the ETH breaking new highs is probably also Solana breaking new all-time highs because it hasn't broken where it was. And that is a mass wealth generation event. There's a lot of people involved in this. There's a lot of fortunes to be made, and that creates a whole new cycle of reinvestment and opportunity risk-taking and stuff like that. Yeah, I totally agree. And it feels like it's coming when that is. I mean, most of my work suggests that, this year should continue and maybe even the first 2 quarters of next year continues. Here's a question I want to ask you. One of the things that we have done the work on is that, and this won't surprise you, the main driver of alt season, as you call it for the smaller stocks, is actually the business cycle. And the business cycle is the same driver as small caps versus big caps. It's EM versus that. It's junk versus, it's always the same trade, because once the business cycle picks up, people have earnings, they go further out the risk curve, it gets reinvested. Why has the ISM remained so low? I mean, you and I have looked at this forever, for our whole careers. This is the longest period below or at 50 in the history of the ISM. What is all this about?
So I remember Julian and I sat next to each other at dinner for the event, and you've heard me say this. In fact, I remember when I saw. I
know there's no business cycles. I get that.
Correct. So here's the part that I'll say though. It is the problem that in a world where artificial intelligence is coming, there should never be a time that the ism takes off. It just shouldn't happen, in my opinion. Now, I'm going to change that a little bit because I do think we're getting closer and closer to something which is related to the business cycle of AI. Because at the end of the day, if I equate all cycles to power, meaning You have to be building something, and oil has always been, it's that macro piece that offsets and is out of control of monetary policy and fiscal policy. You need power. That is the thing that needs to fuel it. And AI consumes an enormous amount of power. And we are going to start to see, well, it's ironic I say this to someone in Spain, but we're going to start to see important blackouts. And there's going to be more of them, in the US. And I think they're coming very, very soon, because I don't think people have looked at the exponential move. And this fits into the alt season side to me. So I believe we are going to see a change in the business cycle. I just don't think they exist in the push button way that they did, where you do something in the economy and it goes. But I do think it's coming this year because of what's going to be needed for the infrastructure build out on data centers, on power. These are massive numbers, nuclear. This is going to be a change. I just think it's going to be financed by the government.
The heart of Raoul Pal's thesis is that we've entered a new era of capital formation, one where speculation isn't just tolerated, it's necessary. The younger generation isn't gambling for the thrill, they're reallocating risk in a system that's locked them out. Jordi Visser backs that up with the data. U.S. gambling expenditures are now on a straight-line increase, recently passing $200 billion annually, while spending on new cars continues to decline. For this cohort, crypto isn't just an asset class, it's the only market where they have agency, real-time access, and the potential for asymmetric returns. But this isn't just cultural. Institutional sentiment is shifting too. Bitcoin is gaining ground as a treasury asset, stablecoins are being adopted as working capital, and regulatory clarity is beginning to take shape. Visser draws an important historical parallel here. He likens the current altcoin landscape to the aftermath of the dot-com bust, a period of disillusionment that gave way to massive innovation. According to him, the crypto market still carries an overhang of supply and disinterest from the 2021 to 2022 cycle. But once Ethereum and Solana break their previous highs and network effects return in full, he expects a sharp repricing. A broad short squeeze is not just possible, it's becoming increasingly likely. This sets the stage for a deeper conversation, one that goes beyond sentiment and charts into the foundations of the next business cycle. Why hasn't the ISM recovered? Why is power demand becoming the new macro wildcard? And how will the build-out of AI infrastructure force a shift in monetary and fiscal behavior? In the second part of their discussion, Pal and Visser tackle these questions head-on, arguing that we're entering a phase where compute power, energy systems, and crypto rails converge, and where the cost of capital must fall just as the demand for intelligence and automation explodes. Let's get back to the conversation.
The middle American, the median person, has had their mortgages up here, their car payments up here, their credit card payments here. They're still like this, right? The stock market goes up, a bunch of rich people get richer, and sure, their pension plans might be going up, but that doesn't make a difference to their pocketbook. The moment they start cutting rates, allowing rates to fall, people can refinance their mortgages and the money will flow.
Yeah, I think what Trump is saying to everyone is the bet he wants to make is to move rates as close to zero as possible. And whether that's 2%, 1%, it doesn't really matter. I think the rate cuts that we did before were a normalization rate cut. So we overshot and then we moved them to a level where you can make the argument that, okay, now we're normal. The next rate cuts to me will be the actual rate cuts that we were expecting. That'll be the trigger for the business cycle. And it'll come at a time where I really do believe we are underestimating just how much build out is going to have to happen to deal with all this compute. The humanoids that are coming behind it, the full self-driving vehicles, the AI native phones, the battery needs. I mean, I've tried to explain to people in my writings with how much hardware is needed for the embodiment side. And I think you're seeing that in the semiconductors. I think semiconductors are the oil of this generation. Yeah. And they're breaking higher and they're broadening out. It's not just NVIDIA anymore. It's the analog names. And I think that's in preparation. So I would be using, and I have in the past, and I'm sure you have too, if you haven't seen this so far, the SOX relative to the NDX, it's having its best quarter in the last 25 years. And I think that's a kickoff phase because I think for a true business cycle scenario that you're talking about, semiconductors should outperform software, and that's what's necessary, and I think that's what started.
In the end, where I get to in all of this is somewhere down the line, the marginal cost of electricity will go to zero. And therefore, you have infinite abundance of intelligence plus humanoids. So what is money at that point?
Well, now you're getting into the point. If I told you, and I'm not predicting this, although in the back of my mind, I've decided, I don't know if you've ever done this, I've decided not to predict publicly where I think Bitcoin's going to go. But I do think the second half of this year will be a explosive up move. And I say explosive because I believe the most important thing that happened in the first half of the year was what Sundar Pichai said on the Lex Fridman podcast and also at the Google I.O. developer. When he said that from a year ago, we were up 50 times in token usage. Okay. Now, if you ask 100 people on Wall Street, what's a token with inside AI, 99 of them won't know what it is unless you go specifically to the tech world. When I hear tokens, I think AI adoption, I think inference, I think reasoning, I think AI agents are just starting. AI agents to me are the most powerful force for productivity and job losses in terms of the going through. But it is massively powerful for Stripe. They should see exponential growth in stablecoin transactions. And you're seeing this, like the stablecoin adoption is happening at the same time. I just don't think people yet know on the wealthy side know how to translate tokens to stablecoins, to Bitcoin, to Ethereum, to the power needed to fund all of that. But I think that's what we're going to learn. And I think that is an anti-fiat situation. I think it's fine. They'll go up together. But if Bitcoin were to go to, say, 500,000 by the end of this year, not predicting, I'm just saying if it did, because of a short squeeze, which I think is going to happen at some point from all the people realizing that it is a finite asset and there are people that need to borrow on it because they got in trouble from 21, 22 and they're borrowing future production and blah, blah, blah. I've now gone through this. If we get a spike, well, that'll put it at $10 trillion in terms of Bitcoin. You'll have the entire ecosystem go up. I don't think the fiat system will see that type of growth in terms of this. And once that's moving at that speed, I think everyone from the investor world is going to start looking at how to participate at a time that wallets are easier to open and we're starting to see more and more. So I just have this belief that instead of this being a boom, I view this as a disruptive shift in money that has to happen at a time, not when the fiat system's doing well, but when the crypto thing is doing so well and it's not based on speculation, it's based on the transfer of money.
Yeah. And I've always said it was a parallel financial system that got built and we're now migrating across. And what we're about to do is migrate the cash system onto stable coins. I mean, it's staggering, but it's coming. And when you've got the government talking about deficit financing and everyone kind of knows that it's debasement, it'll only accelerate the adoption curve because it is the only way out. It's this capitalism eating capitalism. Well, here's the newest form, and it's going to happen, and nothing will stop it.
That's where I think we are. I think all the turning points right now are that capitalism is eating capitalism, and rather than it be a bearish argument for assets, it's not. But I think the pie of assets, the shift should be happening to a different system. And I think that's a very different argument. And I think it'll bring wealthy people in because then FOMO will set in, greed will fit in, and it'll be more towards the crypto world. And that's why I think Circle's important. I think CoreWeave's IPO is important. I think Core Scientific, you're seeing it in the traditional finance side. And when I hear people say, well, I think Bitcoin's not going up because people are moving into Circle. And I'm like, I don't know what you guys are talking about, but that's not the way it works. I just think the Ethereum side and the power side, the whole energy, all of the transactions, I thought it's the token side is big.
Interconnectedness of everything. That's what people don't yet see. And what you're talking about is it's all part of the same thing. It's this new digital world that we're moving into that is entirely new. And it has its own system of money. It has its own system of truth. It has its own ledger system. It has its own everything. And it has its own intelligence and it has its own physicality. I mean, that's what we're moving into. It's a whole new world.
The global economy is undergoing a structural transformation, and crypto is no longer sitting on the sidelines. It's becoming the backbone of the next system. As governments prepare for the AI arms race, the need to build out data centers, semiconductor supply chains, and energy grids is growing exponentially. This build-out demands speed, liquidity, and flexibility, none of which the current financial system is equipped to handle. That's where crypto steps in, not as a niche asset class, but as the native financial layer for a high-frequency, intelligence-driven economy. Jordi Visser argues that the coming wave of demand, from AI compute to token-based settlement, will trigger a repricing of the entire crypto ecosystem. The catalysts are already in motion: a massive power transition, rapid stablecoin adoption, growing usage of Ethereum-based infrastructure, and rising institutional demand for scarce, durable assets like Bitcoin. His scenario, where Bitcoin is pushed to $500,000 through a supply-side short squeeze, isn't about hype, it's about mechanics. As past leverage and misallocation get flushed out, a fresh wave of capital is looking for real, on-chain productivity. Raoul adds an equally important dimension. He sees this cycle extending longer than most expect, not because of speculation, but because crypto is finally integrating with the broader economy. As interest rates fall and liquidity returns, investors will go further out the risk curve. But this time, they'll find a mature, liquid, increasingly regulated crypto market, with powerful network effects already in play. The parallels to early internet adoption are clear. What's different now is that the crypto rails are already built, and capital is ready to move. For informed investors, this is not the time to sit back. The migration to a parallel financial system is happening now, and those who understand the underlying drivers, monetary policy, energy constraints, AI infrastructure, and programmable capital, are positioning accordingly. If you're tracking this shift with us, make sure to subscribe, like the video, and join the conversation in the comments. What's your view? Are we witnessing crypto's final decoupling from the fiat system, or is the real move still to come?